So our next panel is generating outcome. We will have a chance to hear from the leading CEE investment managers what sort of investment opportunities and ideas they have for the CEE region. But before I introduce the panel and we have two questions to vote, I remind you that one question relates to the region, to the CEE region, and the second question is Ukraine specific. So the first question, can we see the question on the screen? Do you expect the portfolio investments in CEE equities in 2016 A, increase, B, remain the same, C, decrease? Please make your vote. Choose a respective button on your devices. You have 30 seconds to vote, and we'll see the results. So here are the results. 39% of the audience expect the value of the portfolio investments to increase. 40% believe the value will remain the same, and 20% expect the value to decrease. So now let's see if our panel will be able to change the mind of the audience. I invite to the floor the panel moderator, the CEO of Dragon Capital, and the President of the European Business Association, Mr. Thomas Fiala. Yes, let's have the second question, please, on the screen. Yes, I remind you this is Ukraine specific. So will you invest in Ukrainian stocks and bonds in 2016? And the proposed options are, yes, I will invest in both stocks and bonds. A, B, stocks but not bonds. C, bonds but not stocks. And D, not in stocks, nor neither in bonds. So please make your vote. Press the respective button on your device. Let's see what kind of moods you have towards Ukraine and how it correlates to the first question asked at the beginning of the conference. Quite pessimistic. So 58% of the audience will not invest neither in bonds nor in stocks. Not very in line with the answer that we received for the first question at the beginning of the conference. Now let's see. Everything is in the hands of our panel members. Please welcome.
Good morning, everybody. I will introduce our 5 panelists, and I'll also ask them to join me here on stage. The first one is Sebastian Karlfeld, Director and Senior Portfolio Manager of Deutsche Asset and Wealth Management Investment. He's been focused, for more than 10 years on investing in the CEE region. And what I find interesting is that he also runs Deutsche Invest Africa Fund. And it will be quite interesting to compare Ukraine to some of the benchmarks in Africa, because it's a question for us whether on the macro parameters it's better to compare to find the right benchmark for Ukraine in Central Europe, in the countries that have gone quite far ahead, or in Africa, and for instance on sovereign risk and rating levels in Africa one might find better benchmarks. Then we have Alexei Krivosharko. He's Director of Prosperity Capital Management, one of the largest investors, or the largest investor in the CIS region. He's got a lot of experience investing in Russia and Ukraine, so it will be very interesting for us to hear from him how the last 2-year developments have impacted the investment attractiveness of these two markets and what we can expect in the future. Then we have Boris Borozan, Managing Partner of Global Sovereign Advisors. Boris advises the reserve managers and sovereign wealth funds on the allocation of their reserves. So it will be interesting to hear how our region stacks up in the versus Latin America, Asia, and other regions in terms of investment attractiveness. Then we have Yasuhiro Miputa, Senior Portfolio Manager at Nomura Asset Management. Yasuhiro has been focused on investing in emerging and frontier markets for many years, including our region, and has invested in Russia, Romania, Hungary, Poland, and Ukraine as well. So he's probably one of the few that might be a little bit more positive on Ukraine. And our last panelist is Piotr Sieradzan from Poland. He's the Chief Executive Officer and Managing Partner of Everest Investments, which is a listed fund manager in Poland, and he's been also focused on Central and Eastern Europe. I'll try to fit in about 8, maybe 10 questions, and then open the floor for a Q&A for about 10 to 15 minutes at the end. So please be ready with your questions, and then we will ask you the same 2 questions as at the beginning of this panel. I would like to ask each of our panelists for up to 2-minute comment on these first 2 questions. What would be your answer to both of them? And in particular on the first one, how do you see Central and Eastern Europe stacking up versus Latin America, Asia, and other emerging markets? Is it more or less attractive? It's been obviously quite attractive up to 2008 versus the other markets, but in my opinion, in the last 5 years, it has been in the shadow of Latin America and Asia, but over the last year, perhaps Central and Eastern Europe has been again more attractive, with growth accelerating in our region versus slowdown in some of the others. So Boris, please, if you could start, and then we will go to my left.
Well, first of all, thank you very much for the invitation here. I'm very happy to be in this country, especially when you need a visa. Last time I was here, I needed a visa, so obviously some of the reforms are taking place. I don't know, guys, you probably, ladies and gentlemen, you probably had experience in real estate, and the same in real estate is location, location, and location. And I would say, for this space here in Bulgaria, I would say reforms, reforms, and reforms. Reforms that have happened already, reforms that are happening, and reforms which will happen. You mentioned on 2 questions. The first question was the region. We have, of the last, I would say, I don't know, 3, 4 years, 5 years, a negative situation in the region. We have some funds coming out. There was one, which used to be part of AIG, they are out of this. So there was another one, got the name. So we might be hitting the low cycle, and I would say yes, I would invest. I'm also sure about bonds. The only place in the Eastern Europe where the rates are coming down is Hungary. So if you buy bonds, maybe that's the part to go. But on equities, definitely yes. On the second question, I would formulate that question differently. When you said equities, you think about public securities, but I would say more as a just general investment, because because there are not too many stocks out there, for example. So my answer is yes, definitely.
Thank you. Sebastian?
Well, first of all, let me thank you for the invitation. Also, thanks to the CEE Society for assembling such an excellent crowd of speakers and such an interesting audience. I'm amazed what kind of high caliber people we have around today. So thank you, CEE Society. Second part of the more important part of your question, dedicated to me or directing to me, is CEE in a global context, EMEA sphere in a global context, and that already gets a little bit more tricky because CEEE part of our last years has not been particularly shiny to any global investor, neither in a global context nor in a dedicated emerging market context, where some people diligently prefer Asia to the EMEA, CEEE bucket, which is quite disappointing for somebody like me running the CEEE desk at Deutsche Asset and Wealth Management. We haven't seen a whole lot of inflows over the last couple of years. I actually voted to see maybe some inflows next year based on quite a lot of economic reforms coming forward, also maybe from Ukraine, although our investment in Ukraine at the current moment is certainly more limited. So the aspect at the current moment is that we have so many elections in the CEEE bucket, Poland, most recently Turkey, I'm not mentioning Cote d'Ivoire, Tanzania, Egypt, which are also running or have been executed over the last couple of weeks. So the whole point of the current debate is actually, and you have that in your name, math versus geopolitics, where the geopolitics or the political part plays a very and ridiculously important role at the current moment. So you might have some very compelling investment ideas in the region right now, but you just cannot say where the political scene, where the political environment is heading to. So if we can fix these aspects, if we see some clarity coming through in individual countries, and I was impressed by the ministers making these comments today. I mean, they are all talking about reforms, you also included. And in particular, the Minister of Finance was also saying that what she hears, and I want to highlight that, is that we need to see implementation. And for me, as a senior dedicated investor, I want to see implementation as well, in particular in Ukraine, of course, where we are very much early on the onset of that development process. Maybe you can talk later a little bit about these African comparisons. That could be quite interesting. So generally, I'm positive for the senior sphere. We need positive news from a political universe in order to attract what you can name tourist investors back to the region, namely tourist investors who have the bulk of their assets in developed markets or in global emerging market funds who are not present at the moment at all. If you can attract these investors in size again and show them that there's good companies around in that region, not talking about Ukraine alone, but in general in the senior bracket, so they get sticky to the region, see high dividend yields coming in, high growth rates, then I think we could have a very promising, maybe not 2016, but next 3 years.
Thank you. Alexei, what would be your view of this?
I guess it's becoming very tricky, because firstly, I think it's wrong to look into the stock market from those geographical breakdowns. I think this concept itself failed, more or less. We got a lot of delusions in the last 5 years. China is not growing, Brazil is also corrupt, Russia is also corrupt, you name it, everywhere. So those big myths on which a lot of people who are, I would not use the word from Sebastian as tourists, but essentially when our clients allocate their money, and essentially these are either pensioners or governments or wealthy people, they go through buckets of decision-making process. And to me, it seems that the whole idea of kind of breaking the world into groups and kind of somehow linking them, Asia, GEM, Africa, is wrong. Essentially, I think it will all get down to country by country model, because You got a lot of very different performances from individual countries. I mean, some people decided to stuck to its stupid euro currency, like Ukraine was stuck with hryvnia for like 5 years, which was building a recipe to failure. Others chose to free float it like Russia. And that makes a big difference. And you can't really generalize and say, oh, GEM region is so good because it grows so fast and stuff like that. Because in reality, this is wrong. I mean, all your averages are just averages. And there are companies which perform very well, and there are companies which steal the money. Kind of, you got some result on the average, but if you were to go along those route of allocating the money through those kind of weightings and channels, you may well get nothing as outperformance. So we actually strongly believe that people will get back to country-by-country model, and very sophisticated investors, like Norges, for instance, they do it like this. They know more, give allocation to people on the basis of region, which I think is fair, given what I've just said. Because if you look at what everybody expected 10 years ago from any country, and look at what happened, maybe 30 or 40% of those expectations proved to be right. Oil price is now 50 and not 100. I mean, we have war in Central Europe. I mean, we got Petrobras apparently stealing half its capex. We got China not 10%, 5% growth. I mean, all of this actually has fallen apart very, very quickly. How do you average it up? You can't. So we, again, tend to take the view that kind of investing on the basis of some analyst doing an estimation where to invest it on the basis of free flow inclusion factor is your worst mistake. That's what everybody do. They look at MSCI, they look at what is listed, what percentage of free float is held by foreigners. That's how they calculate the indexes. This is just so wrong. And when you outsource your investment decision to somebody who kind of does some mathematical analysis first and then looks at fundamentals, this is just wrong assumption to begin with. That's why we always also try to, I mean, it's of course fun to talk about macro, but does it really matter if GDP growth will be 4.2 or 4.1 or 3.1? Doesn't matter. Who cares? I mean, nobody links its forecast to GDP growth. You may have some strange warrants in whatever, Greece, which God knows how it's calculated. But in reality, it doesn't matter. Individual companies, they make differences, and individual management makes differences. That's why we strongly believe that you really should totally ignore this noise about geographies, locations. Look at countries. Yes, it's more time consuming. Yes, of course. Yes, it's more complicated. Yes, you can be wrong many times, but at least you know the framework. And if you can do it consistently, I guess there are many good examples of very good performance by country managers, Russia, Brazil, China. People who do it in their own kind of market, they show much better result than people who kind of do this kind of global budget approach. That's why if you ask me, I guess this question is a little bit pointless, because what is CEE? There are 12 different countries with different dynamics. I mean, what do you make out of it? But I think it's better to ask a question like, what would you buy in Ukraine, what would you buy in Poland, what would you buy in Russia, what would you buy in Romania? These are more better questions. That's, I guess, comment on number one. On number two, I guess, we voted with big confidence into one Ukrainian company, which is super competitive and mature. Impediments, which was the sign of being mature. Very unfortunately for Ukraine, the easy money of 2004, 5, and 6 created a lot of feel for entrepreneurs that you can take the money and run. Look at how many, and essentially, I have to say that it's very sad, but the failure rate in Ukraine is unprecedented. You compare it with pretty much any other country, and you would not find such failure rate. When I mean failure, it's not like they build something and there's no demand. I mean real failure or fraud. Took the money and run, took the money and run. Just have a look at how many companies floated, how many of them are out there, still with profits and whatever, market caps. It's bizarre. I don't know who is guilty, I don't know why it happened, but this definitely leaves you some aftertaste. It's hard to say what to do with it in reality, because of course entrepreneurs need to mature first, quite a lot of fund managers already matured who invested in those entities, so any new public offering in Ukraine will be scrutinized big time. But what I would like to say here is that it's definitely very important for Ukraine as a country to develop its own long-term pension system and long-term domestic green denominated stock market. Without this, I guess, both Ukraine and Russia, to that extent, would be really victim to volatility and vulnerability, because it's a huge country with gigantic potential on each side, agriculture for sure, IT for sure, a lot of the industry for sure. If the government will be smart enough to realize that you could trade both ways, not just try to push everything to Europe, which will not take those routes anyway because they're not competitive, then I guess the country can pretty much repeat what Finland has done right after the war, for instance. And we actually have very high hopes for it. That's probably a long answer to a short question.
Great. Thank you very much. Jasmiro, what would be your opinion?
Thank you very much. First of all, I just want to talk about my campus. Nomura is one of the largest financial institutions in Japan, and Nomura Asset Management, the British company I work for, is also one of the largest asset management companies in Japan. And we have a country and a regional dedicated funds specialized in distribution, and those funds were established 20 years ago in 1996, so that we have one of the longest running CEE funds in Japan. And we are very proud that we are managing, that we are offering the products that give the Japanese investors the opportunity to participate in the growth opportunity distributions. With regard to question one, that investment in CEE, that also like Jan mentioned that some very interesting investor reaction that we saw that over the last 12 months, that in December last year, when we saw that Russian ruble is really collapsing and people started to panic, at that time, actually, we had a nice inflow from Japanese retail investors into our Eastern European funds. And also that in June this year, that when Turkey had an election and the ruling AKP party was a majority, and then currency and equity markets are down, then again that we had a very nice inflow into our Turkey fund. That volatility is not necessarily that scare away the investors. So that if you use it wisely, that actually that creates an opportunity. So that actually the investor interest is actually there. But again, that this region has to compete against the other regions, and most of that, the strong economic growth is still coming from Asia, and probably that will continue. Despite the fact that China is slowing down, Indonesia is slowing down, but we will continue to see that the better, stronger growth in Asia. So that is a very tough competition. So that on balance, that probably my exposure to the region probably will remain same. And the second question, that whether invest in the Ukrainian stocks or bonds. And yes, this country is now going through this kind of transformation and this kind of opportunity that you don't see that often. So that if you capture it, correct, so that can produce the big returns. So of course, I don't want to get into kind of speculation or timing game and when to get in, when to get out. So that the best way to play this kind of transfer information opportunity is to invest in quality companies. That companies that I can be patient with for like 3, 4, 5 years. And so that the question is that whether I can find those quality Ukrainian companies. And that probably answer to that is probably yes, that there are not so many kind of options, but probably that I can find at least one or two quality companies that I can be patient with. So that perhaps my answer to question 2 is yes, probably yes, we're looking for opportunities to invest in the Ukrainian stocks.
Thank you, Piotr, please.
Thank you very much for inviting for such a great venue. According to question 1, answering question 1, I would say yes, although I'm starting CEE-oriented funds, so it may be a wishful thinking in my case. I believe that Central Eastern Europe will actually gain capital, gain investors in next year. Simply because if you look at the real economy of those countries, or most of those countries, and if you look at the performance of their stock exchanges, compared to what's happening in the West, Central Eastern Europe looks much better in terms of real economy and much worse in terms of stock exchanges. So definitely there's a divergence which will finally converge. The big question for me is whether 2016 will be a bit better than 2015, or there will be some major trend change and we'll have a bull market rally. I hope so, but I wouldn't bet that it's the obvious direction to go. Second question, I think it was formulated a bit tricky because somebody told that the answers were not very positive. Well, probably first people should be asked the question, are you an investor at all? And then are you allowed to invest in Ukraine? And then if you're an investor allowed to invest in Ukraine, then whether you will do so. Whatever we say about current situation and the reforms taking place in Ukraine, that country is in the middle of the way with a lot of risk, both geopolitical and internal, political, economical. So my answer was no, not because I do not believe in Ukrainian economy going in a good direction, but because of the risk associated with that, and because of the fact that if you have such big changes happening in a country, if I had a team of people here on the ground knowing what's going on, investing in private equity, maybe real estate, then I would invest. If I'm not, and that's the case, I don't think it's a time to be an aggressive portfolio investor in Ukraine now.
Great, thank you. In formulating the next question, I'll take Alexei's advice and jump straight to stock picking or country picking. And perhaps Alexei can answer that question first. What are the favorite countries that you look at? Where do you have your portfolio allocated, and which stocks in particular you prefer? And then we can start from Piotr and come back here and get the same answers from the others.
Yes, I'll probably do two, which are, I guess, quite obvious. If you look at the MHP, and compare it with, again, you can look at absolute numbers, you can compare. I guess it's, both approaches are fair. It's obvious that the guys are quite low cost. So, if you look at their biggest competitor, which is BR Foods, they produce around 3 million tons of chicken, of which a third they export. MHP does half a million right now, of which 100,000 they export. So obviously for a commodity business in which they are, it's very important that you are cost competitive. So when doing the math and cutting numbers here and there, you would see that they are substantially more competitive. It's 20, 30, 40% on a per ton basis. So can they export more? The answer is yes, they can if the market is up to them for grab. And there are structural reasons. Number one is there's a lot of labor efficiency in scale. So the fact that they have two very big plants, each close to 250,000 tons, is basically 2-3 times the size of average plant of BR Foods. So are they competitive? There's the ones, yes. Their cost is approximately $750 on a like-for-like basis versus maybe $1,100 for BR Foods. And the global market right now prices is $1,300, $1,400. So it's already interesting enough to keep digging. Then you look at kind of what stock market pays for them. Brazil Foods now trades at 15 times earnings, and MHP at 4 times earnings. And answering the question why, he just said, we don't want to touch it because it's Ukraine. And it also showed that it's cash is real, because for the last 3 years, they paid a significant part of cash flow as dividends, close to 50%, which is, again, for us, a big sign of trust. Well, firstly, maturity of shareholder, and then we obviously go with him. So that, for us, is not this choice. How much this company should be worth? 3-4 times more than this, for sure, for sure. That is one thing which stands out in Ukraine from our perspective. I guess in Russia there's also another pretty interesting case, which is gets us a little bit to this tricky question of oil price, but still. There is a mid-sized oil company called Bashneft, which currently trades at 2.5 times earnings, with lifting costs of around $9.20, $9.30, and all-in cash cost of maybe $14 per barrel. And have a look at Bashneft, with 6 billion market cap, and have a look at EOG, the best run darling of US fund managers, which is US share oil company, which has all-in cost of $60. And obviously it was not making money in the first half this year. And its market cap is 24 billion. It's kind of obvious what to do. So we try to really do bottom-up companies where we understand the management, where we know what they want. The case of Bashneft was tricky because it changed hands. It went from being private to being taken over by the state in a very unfriendly way. Nevertheless, the company was able to kind of keep the management, keep the cash flow. Yes, the dividend kind of payout has changed quite considerably, but still, I mean, we're sitting at 2.5 times earnings and a dividend yield of 10 to 12%, which nothing was good enough. So MHP is maybe 120 million for us, and Bashneft is maybe 170 million for us, overall, as exposures, which is out maybe 2.4 billion, significant chunk. Those just two examples.
Thank you very much. Piotr, what are your favorite stocks?
I wouldn't like to give specific stock recommendations. I usually don't. But on the country allocation, I would probably play Poland long term and try to play Turkey short term, having in mind what's going on there, having in mind what's going on in the Middle East. Paradoxically, after the elections, I think there will be a period of some stable growth. At least the investors, well, the people who are about politics, they may have different opinions, but in terms of economy and investing, I believe that investors' impression would be that not much will change soon. So stability is usually a good period for investing. And all Central Eastern Europe, I would be a stock picker because there are, as somebody said, you have many markets and they are very different, but in pretty much every market you have interesting companies. If you manage to do the research, if you manage to find liquidity to buy them, it's a good way to go. In terms of bonds, the interest rates are rising, so probably it will not be very good investments, but of course it depends on the profile of your fund. If you have to buy bonds, then you have to buy bonds.
And I mean, since you are a specialist on the Polish market, in particular, what sectors do you like there the most, and for which reasons?
I would say that currently the Polish market, especially short term, it's more about the size of the company than the sectors. Of course, long term, it's the revenue growth, it's the profit growth, not really the size of the company. But the situation we are now is that the market has been waiting for some time for equity funds to join in, to start buying mid-caps, and the retail investors to start buying small caps. If that happens, you will earn a lot money having those. Currently, I would concentrate more on blue chips, of course not banks, which will suffer, nobody knows whether they suffer a lot or they suffer a little on banking tax to be imposed, and on ideas of changing the currency of Swiss franc denominated currencies. If there will be signals that there is money flowing into the market, then I would look for the market company by company and look for cheap valuations and positive revenue growth.
Thank you. One last question on Poland. Poland had the most successful pension reform in the end of the 90s in our region. The parameters of that reform have been changed a couple of years ago. What is now how does the composition of investors in Poland develop? What is now the share of local Polish investors, the Polish market, of international investors, local retail versus local institutional investors, and how do you see those shares of those investors developing in the future?
Well, you are very politically correct. Well, what can I say about the pension fund reform? It's easy to do the reform when you are saying to your people, to your electorate, that you are making a system that will make them being well off as they become retired. It's a bit more difficult to keep it if you have 100 billion Polish, which is now 28 billion US dollars, that you can easily take and spend it for whatever you need, being in the shoes of the government. And that's basically what happened. It's nothing new that the money simply has been taken and used for spending. The main argument was that it's costly. Well, of course, investing is costly because you need to stop spending and invest part of your wealth and not use it for your daily needs. And that's exactly what happens. I would say that's very negative for the market. That decreased a bit a share of pension funds in the stock exchange turnover or in the market, although you need to be aware that the part that has been nationalized, and I think that's a proper word to use, is basically the bond part. So the equity part is theoretically still intact, although pension funds now look for investment opportunities outside Poland, which is logical and is now possible, opposite to what was before. I don't remember the exact numbers, what's the percentage of stock exchange turnover done by pension funds, mutual funds, and retail investors, but I would think that we'll continue to have growing share of mutual funds. The foreign investors, they come in and come out. It depends much on the sentiment to the region. Probably investing country by country or company by company is right and proper in terms of the art of investing, but many funds still treat investment universe as buckets called emerging market, developed market. Within emerging market you have the regions, within the regions you have countries, within the countries you have companies. So they go in and out. If the macro guys tell that Central Eastern Europe is the place to be now, you have capital inflow. If they say that that's the bad place to be, then the capital flows out. A bit similar, although they look at totally different indicators, or I wouldn't call them indicators, retail investors. We had a decent share of retail investors on our stock exchange, which was good, but they were there for a reason. First, the stock exchange had very good results. I mean, the indices, the companies were growing. Second, you had a series of privatizations which kept people at the capital market. People knew that the companies are being sold that way, that if you buy them in an IPO and sell them 2 days after the first listing, you will earn. You could do 5%, you could do 50%, depends on the company and on the situation, but you will earn money. Now the privatizations are more or less gone, so that factor is out. The other factor that keeps retail people in the market is basically other retail people that have earned some money recently and they haven't. And that's what brings people to the market. So you need a wave to start, and then the last investors on the wave would be retail investors. So I would say probably the mutual fund share will grow. The pension fund share, those pension funds, so second pillar pension fund, the pension funds you mentioned, it will slowly but diminish, because the money they have, they invest abroad, and they will have to start paying pensions, so probably their share would decrease. Foreign investors depends on the macro situation. Retail investors, I would say they will switch into mutual funds, although they do it slowly. And if there's a good situation, if it's a bull market, then they flood the market. Usually some of them lose, so they say, okay, never again. A few percent of them keeps the promise, the other one, they are back as another bull market comes.
Thank you. Yasuhiro, what are your top 3 stock picks? What would you recommend our audience to invest into?
Actually, again, I don't react on your name, specific stock names, but in general, that we like companies in IT sector, but although that IT is not really totally immune to business cycle, that they may be suffering as much as any others, but we still see that the better sector growth trend in the IT sector. On the corporate side, having a strong IT infrastructure and making good use of data, those are very essential in winning the competition. Just because times are tough, you cannot cut back on IT spending. But simply speaking, that you have to keep investing in IT, so the demand is there. And also on the consumer side, that based on the experience in Japan and Korea, that increasing penetration of high-speed mobile broadband, 4G, is having such a great influence on consumer behaviors, and then that the migration from 3G to 4G is having a much significant impact than migration from 2G to 3G. And actually, for the past time in many years, the telecom companies are seeing that increasing output, that increasing the data revenue is finally offsetting the decline in the voice revenue. And those consumers who previously didn't want to bother with playing these tiny mobile devices, but they are increasingly now hooked onto the new services and the apps on the mobile devices. So that this is the high-speed mobile broadband is really changing the consumer behavior and creating the new opportunities for many businesses. So they are not just replacing the PC-based markets. So also that in the financial industry, that we are seeing that increasing the financial services products are shifting to the online platforms, and many the fintechs are threatening to becoming a very big threat to the very large established incumbent firms. That the IT sector is seeing the very rapidly growing business opportunities. So that's one. And the second one is that, and perhaps we are finding that the retail sector is also interesting. That this is overall the economic environment is very, very tough. So that we are still seeing sort of earnings downgrades and earnings pressure. But actually, this is a very interesting time to know that who is doing better than others, who has the more flexible and nimble operation, who's got a better understanding of ever-changing consumer preference. In my view, that the retail sector has almost a rocket science. You need to have a just-in-time inventory management. You have to have a state-of-the-art distribution system and so forth. So that actually this is the environment is very, very tough. but for both of our speakers who are looking for quality companies, actually this is a great time to know that who is in a better position to benefit from the next leg of growth that once the economy starts to improve. So that the IT sector, the retail sector, that we are finding a very interesting.
Thank you. And Sebastian, to conclude this question, and then I'll ask one more.
All right, good. I'll do that quick. I also won't give you any stock picks, and I also agree with consumer fintech to some extent, financial intermediation, retail sectors are very interesting pockets. I just want to caution again on the macroeconomic environment once again, because this is something which, even if you're an excellent company in a shoddy macroeconomic environment, your stock won't perform really at all. That's currently quite a disaster. I have like plenty of these examples. I mean, I have to go. I don't have to go to Nigeria to make that case, but in particular, Nigeria, we see what havoc can a low oil price exert on an economy and on the consumer sector, where usually, if you look at the McKinsey study or the BCG study, they will tell you consumers in Africa will do fantastically well. We also believe that the growth will be fantastically great over the next decades, but decades is quite long, and there's a famous quote that in the long run, we all that, whatever. So short term, there's so many question marks in individual economies, and we have to be sure that the macroeconomic environment is sound, and that we have like a stability in regulation. I mean, it's not been 2 weeks ago that the major South African telecommunications guy, which has like half of its EBITDA coming from Nigeria, the other part from South Africa, was fined a gargantuan sum in Nigeria because they didn't obey certain regulation, and this is killing the entire investment story for that stock. So if you are not sure how the regulator is behaving, what the new president's ambitions are, you can be in the best stock and still lose money.
And what do you think are the best benchmarks for Ukraine? Is it some countries in Africa? Is it some countries in Central and Eastern Europe? Where does Ukraine kind of stack up versus the CEE universe?
I think there's lessons to be learned in every country, and I mean, we heard from the Minister of Agriculture that we take extensive advice from the neighboring countries. There's also one person in the audience from Kenya, and in particular, financial intermediation in Kenya is, I mean, Kenya is for a certain reason called the Silicon Valley of mobile banking. It's the hallmark of financial inclusion via mobile banking. The leading telecommunications giant there developed a system called M-Pesa, where you can easily transfer money via a cell phone in an instant at low cost. They make a significant contribution to their EBITDA from that system, and they are the benchmark globally, and it takes other countries ages to introduce the systems also in Africa. So also in terms of like fighting corruption, Kenya is going the same way, then bringing aspects online so that people have to register their cars or whatever online. They can't go to a government office, so they can't tip somebody off to do something faster. They just do it online. So this is also an excellent tool to fight corruption, and also in order to grow education in these economies, because access to information is, as we all know, key. And one of the critical issues we have in emerging markets in general is that there's a scarcity of skill sets. So if you give people access to knowledge, they will, I mean, not everybody will, but a certain amount of people will actually utilize that knowledge very well, will build local businesses, and will not then flee that country, and maybe will exit, and you will not see that amount of brain drain which you might otherwise find in these economies.
Thank you very much. Now, one last quick question for everybody, and then we'll open it for the audience. How much is your decision-making being influenced now by the Russian military and economic aggression versus Ukraine on investing in those two countries and perhaps any others in the region, and how do you expect for this aggression to continue impacting your decision making in the future? Do you think that the conflict is over in its current frozen form and it will continue, it will be less and less of an influence, or it will continue to influence your decision making? Boris, please start.
Well, geopolitical situation is probably number one, but even before that, we have to think about what the Fed will do. Everyone talks about it. I don't think that they will do too much right now. And then, of course, you have China. On geopolitical situation, clearly we don't have control of that. No one does. But on Ukraine, there's a few interesting, actually, opportunities. There is a congressional bill 2277, which basically, in effect, guarantees the loans of the companies which develop oil or gas or some agriculture, guaranteed by the government. I don't think too many people. We were approached to look at that. I don't know too much about it. I know that Ukraine is a fantastic agricultural opportunity. And I will give you an example from one of the countries, which is Latvia. We just closed the transaction after 10 years on agricultural land. We had 31, 32% return, closing the sold to actually a German company. So that was a great success, and I think, I'm not an agricultural person, but I think Ukraine is certainly better than Latvia. I have support for Latvia, but I don't want to put it down. I think that there in the north you can have much more a longer season, etc. So I would think about agriculture. Just remember the other region. We didn't close it, but we have a situation which is working right now with a return of about 70% per year, which is the windmills in Croatia. And there is a trend, obviously, everywhere. And to mention again the windmills, just to throw against unknowns. You had a whole region in Norway which had windmills, and they issued a bond that was 8%, and then practically they default. So by cutting the coupon to 4%. So we're talking about different risks. Of course, everyone said that Norway is the country which will default, but yes, in fact, we default. So I think we don't have a geopolitical control. I hope that there will be some brains out there, smarter brains out there, prevail and stop the situation, and that we have a continuation of reforms.
Thank you, Sebastian. What do you think about the Russia-Ukraine conflict? How does it impact your decision making?
Well, I mean, for now, in terms of investment perspective for next year, I would rather say that given that where the oil price kind of lunges around right now at roughly $50, so we see a stabilization. Companies, economies can adjust to that. I'm actually rather optimistic for Russian stock market next year, despite whatever's going on in the troubled zone at the current moment. So this is, I mean, equity markets already kept in like a huge decline in oil prices. So I think we can be fairly positive actually on the Russian stock market for next year as an aggregate.
I have forgot that we have clients which are invested in the Russian stock market for a long time, and actually they are adding about the one big position, of course, is Gazprom. And when you talk to them, they say, well, you're buying Exxon at 50 cents on the dollar. And the other position is Sberbank, for example. which
Alexei, please.
You're asking me a difficult question. Well, firstly, from the facts, we did not adjust our exposure to Ukraine since the whole thing started. And mainly coming from the logic that this is the unfortunate event with guilt on both sides, and at some point of time we have to be negotiated. It's unfortunate that it took so much time and it took so many lives, but we still are of the opinion that both sides are guilty, not just Putin, but also the former Ukrainian leadership, the European Union, which created false expectations, and they still are guilty. So from that perspective, Ukraine itself has a very limited window of opportunity during which the parliament needs to pass a number of very important laws, as out of which there will be a combination of economic settlement and political settlement. Because obviously Putin is not interested in increasing pressure, because obviously he has issues himself locally. So he doesn't win by doing more. I don't know whether, and I guess no one knows really, to what extent the president will succeed in kind of pushing this through. But there's really no alternative in reality. If for some unfortunate reason it doesn't go through, but at the same time Ukraine will get funding, then I guess we can get in a very long-term frozen conflict, which is difficult to foresee when it would be resolved, both in Crimea and in Donetsk and Lugansk. This, to a large extent, is something which we really don't know why it is happening, because there are different theories. But we don't know. The answer is we don't know. We know that it is reasonable for Ukraine to trade both with Russia and EU, absolutely. We know that it is reasonable for a country to predetermine itself whether it wants to be a part of some military bloc or some economic bloc, for sure. At the same time, it's difficult to have one border open and another border open as well. So some sort of interaction must be in place. And I guess it's also reasonable for Russia, with open border with Ukraine, to kind of have some sort of role in these negotiations. That's why at some point, kind of, you can understand why Putin demanded some sort of conversation. And of course, he was stupid by trying to buy Yanukovych, because it was a bad idea. But then he kind of had no choice, because there was no counterparty. So he chose to move faster. Maybe he could have bought the whole Crimea and part of Ukraine for that money. I don't know, the money which kind of Russia burned in the end. But he chose to act like this. So I guess right now we're in a very tricky situation where there's limited window of opportunity in terms of time. Maybe it's 6 months, maybe it's 9 months, maybe it's 12 months, during which Ukrainian population need to have some sort of final response from the government. This is why I'm getting better, and obviously what I showed us is wonderful. But at the same time, unemployment is huge, inflation is high, and no real reforms are going through in reality. Some small reforms, but no real reforms. But I mean, there should be final settlement. And there must be local political responsibility to accept. And as long as there's no responsibility, as long as politicians are childish, then I guess we can get in a very dangerous situation, potentially. So the ball is entirely in Russia, between EU and those people who were elected by the Ukrainian population. I guess whatever was done by Putin is obviously something which will be judged separately at some point of time later on. But I guess we are extremely worried about what's happening right now in Ukraine. And we hope, again, our idea is that things will develop in a proper way and there'll be friendly settlement, which will be followed by further economic activity of Russians and Ukrainians together. And that's our base case. probably 80% plus probability. That's what we're putting it right now. But there is also a possibility that it might not go ahead like this. And from that perspective, I guess Russia is fine. I mean, unfortunately, people are making so much money still that they can live with lack of democratic institutions for quite some time. And I would say that in general, it was very smart to let the ruble float. Timing was horrible, execution was horrible, but still, which allowed basically the country to balance the budget, balance reserves, and the country is printing money to current account every month. 50 or 40 or doesn't matter really. So I guess from that perspective, unfortunately, there is a lot of reserve in Russia before some sort of changes on the political side might happen. I mean, hopefully, Putin will be smart and will allow political competition sooner rather than later, but still, so I guess right now Russia is more than fine, even if oil is at 40, even if it's oil at 40, so I guess from that perspective, I agree with Sebastian. There's really no reason not to get in. But for me, Ukraine is much more tricky.
Thank you. Yasuhiro, but briefly, please, so that we give opportunity to the audience.
Yeah, based on my personal experience, the usual politics is provided by opportunity that to be specific, the market correction due to the fear surrounding politics is a buy opportunity. As long as that political noise doesn't affect the economic fundamentals. So the question is that this kind of geopolitical risk between Russia and Ukraine of this magnitude is really affecting this macro fundamentals? Yeah, probably yes. So this is the kind of risk that as a portfolio manager that I cannot really control that. Also, some economic fluctuation, earnings fluctuation, to some extent I can control that through kind of diversification and portfolio risk control. But this kind of risk is extremely difficult and it's really totally beyond my control. And also then just reminds me that in late 90s there was some kind of escalation, tensions between the mainland China and Taiwan. And then actually the market suffered and it took about 1 year for the Taiwanese market to recover. But again, eventually that didn't really affect the economic fundamental of the both countries, neither of the countries. But also that there was some kind of escalation between Pakistan and India, that when they kind of had a nuclear bomb testing, and that created a noise. But eventually, that if I remember correctly, that didn't have much significant impact on their macroeconomic fundamentals. So in that case, probably I can say that politics, perhaps the rates are the opportunities, and as I said earlier, that volatility that is used wisely, that raises opportunities. But coming back to this, Ukraine and Russia geopolitical risk, is that a risk I'm willing to take? Is that a risk worth taking? Actually, I'm not so sure about it.
Well, as far as Russia is concerned, the situation looks quite simple. Somebody who will enter before the crisis ends and before the capital starts flowing to Russia, because there are like two spheres. One is influence on the real economy, and the other is how does big international investors behave. And well, we've seen that many times that on the markets that were doing well, if there was outflow of foreign capital, the markets themselves started doing terribly, even though the real economy was doing great. So we cannot underestimate that. So if the crisis will be over, the capital starts to flow into Russia, definitely Russian equity market will be one of the best places to be in terms of returns. The question is when and why it will happen. So I would say that the more close to either resolving of this conflict or to some sort of stable situation we are coming to, the better investment opportunity we can see in Russia. Ukraine situation is a bit more complicated. Foreign aggression is always bad, but I think what can happen, and I hope it will happen, that what happened in eastern Ukraine will actually make Ukraine conduct the reforms it should have conducted 20 years ago. Change the law should have changed long time ago, and then there will be an opportunity simply because of that. And next step, if the crisis will be resolved or there will be some stability, like long-term stability, then investors will find Ukraine again as a country with low valuations, as a country with a lot of opportunities, as a country with high growth potential. But two things have to happen. One thing is the reforms. The second thing is stability, or at least the sense, seen from London, seen from New York, seen from any other place, that the political situation in eastern Ukraine is stable.
Great, thank you very much. We have space for 3 questions from the audience, so please raise your hand, introduce yourself, and address the question to somebody specific, please.
Excellent. I have a question for Mimbuta-san, and that is, you know, the Japanese government has done some interesting economic reforms, including tax and privatization. Can you compare and contrast the experience that might happen in Ukraine after the reforms that have been discussed today? As you are a North American portfolio manager with only assets in Japan and Ukraine, how would you allocate your portfolio, and what would you expect to be returned based on the comparison of the reforms?
Yes, the Japanese government is talking about reforms, but so far the visible impact we are so far is that just depreciation of the Japanese yen doesn't have a positive impact on the Japanese government earnings. So that unfortunately this true general reform we haven't really seen yet the major progress. Yes, we badly need this kind of reforms. But the implementation has been painfully slow, as usual, in the past in the Japanese experience. So that actually the expectations are running ahead of the real fundamentals. So yes, as a Japanese citizen, that I'm like maintaining a high hope. But the reality is that yes, maybe like the TPP, that kind of the free trade agreement. So that's kind of a major milestone that is showing that the Japanese government commitment to make reforms. But whether are we going to see the fruits of that the free trade agreement tomorrow? The answer is no. That's not a very gradual process. So that again, that the pace has been very gradual and slow. And in the Ukraine, I guess that this is a very good opportunity to make a big push on the reforms. Also, I'm not sure that if this is a fair comparison, but as I manage the global emerging market strategy, that one of the best performing markets in these 2 years is Argentina. The country, since the country reported in 2002, it has been shut down from the international capital markets for many years, and probably by now that many investors have written off the country from their investor radar screen. But now that the market is anticipating major shift in economic policies and the big rally in the equity market is continuing. So of course that the situation that each country is facing is very unique and it's different from one country to another, and perhaps I should make a comparison of what's happening in Argentina and what's happening in the Ukraine. But again, that this transformation provides a really big opportunity, and as an investor, that you should be prepared for that. But again, the timing of this duration and risk of 50. So that, yeah, it's sorry that it is really hard to compare the response in Ukraine and the response in Japan. These two countries are totally in a different states, like economic development.
Thank you. Next one.
I will ask you to make your questions very brief and sharp, just for the sake of time. Yes, second question? So we don't have questions anymore?
Okay, well, thank you very much. Let's thank our panel, we will... we have one more question. Okay. Oh, great.
My question goes to Sebastian. As I know, you've worked in the African continent and Ukraine. African continent. And Africa and Ukraine, they have similar characteristics, that is high levels of corruption. My main question is about the bonds. In Kenya, about a year ago, the government put Eurobonds. They say they are going to be up to maturity, they are going to pay for the deficits the country has, different debts, but it turned out after they didn't do that. So it is there in the public that the government used the bonds, with the results of the bond of maturity of the bonds to do other activities rather than pay for the debts of the country. So as a citizen, what are the things that the government can do so that to bring back the confidence of the people that they are going to the bonds the right way, so that we don't have the results like we have today, most of the people have the confidence.
All right, thank you. I'm not really a bond person, so excuse me if I be a little bit more holistic, superficial there. But one of the core aspects which we have in many African countries these days is that after the big debt relief at the beginning of the millennia, all the debt to GDP balances looked really, really good. And now in half of these countries, they actually are close to the levels where they prior to debt relief systems. And that's what you've just been describing, that they raise debt, but don't use it actually for proper investment, but actually in order to spend like a lavish lifestyle or whatever with the money. That's why I'm so adamant about the geopolitical and economic system, macro backdrop of any economy, because countries can use money efficiently if they want to. So Rwanda is actually a fairly good example, and Georgia as well, where I've seen money being raised, being employed properly. In Kenya also, it's a major issue this year with the debt raise that we have the problem of, or the government is saying that this goes into infrastructure, which is naturally a good thing. I mean, you know better than I do that like in a couple of years there will be major oil production coming from the Turkana in the northwest of the country, which could significantly change the economic balance of Kenya. So I tend to believe that the government has some kind of forward-looking strategy, which is good. One other example, which I think really shows that African governments can do very well with debt they raise, is coming from North Africa, actually Egypt. I'm sure you all know that second week of August this year, they opened the second Suez Canal, so they digged within one single year another canal next door to the old Suez Canal. They funded this last year with an $8 billion loan, which they raised entirely from the population. And they have a quite nice interest rate on that, which they pay back to the population out of the revenues coming from Suez Canal. So this is something where we have a government in place which is, you might argue about how they do in certain other aspects, but the Suez Canal is something sustainable, so we'll have it in 5, we'll have it in 10, if they maintain it even in 100 years, yielding economic benefit for the country. So we always have to watch very closely how diligent is the government really in employing this money. In Kenya, at the very moment, I'm hopeful but not sure. In Ethiopia, I'm sure, but there's no equity market, so we can't capitalize on that. And in Egypt, we have evidence that that's working very long.
Thank you, Sebastian. One more question, but only a very brief one and a very brief response, please. Okay, excellent, because we are really running out of time. The lunch is already waiting for us. I'm sure you can smell it. But before we leave, we will repeat our voting. I will remind you about our 2 questions. Please take your devices. So the first question is, do you expect portfolio investments in CEE equities in 2016 to A, increase, B, remain the same, D, decrease? I will remind you that at the beginning of the panel, you were hesitating between A and B, increase or remain the same. Let's see if you have changed your mind. So what do we have? So we have 40 people now who believe that the value will remain the same. So at the same time, so it's a decrease of 9 people. We have also less people who believe that the equity will increase. So it looks like you are still hesitating. All the equity will remain the same. Now I will ask you to vote for the second question. And I will remind you the second question is about Ukraine. Will you invest in Ukrainian stocks and bonds in 2016? A, yes, both in equities and bonds. B, stocks but not bonds. C, bonds but not stocks. And the final answer, and neither of them. So please cast your vote. The final question before we break lunch. Again, before the panel we had 68 people who would not invest in neither bonds nor stocks. So let's see if you are more optimistic about Ukraine. If you found any interesting opportunities and ideas. Well, there is some positive change, I would say, because now less people feel like not investing in Ukraine. So we have 49 now who gave their vote to the final answer, while it was 68 at the beginning of the panel. So yes, we have more positive answers. Yeah, here you can see the comparison. So more positives for B and C, which is a good result, I believe. Thank you, gentlemen. So now we break for lunch. The lunch is outside the conference room. We have no last time, unfortunately, for lunch. I would encourage you to be back here at 2:15. Thank you very much. Thank you, the panel members.